welcome to Varun Beverages Limited's earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anup Pujari from CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on Varun Beverages Q1CY24 earnings conference call. We have with us Mr. Ravi Jaipuria, Chairman of the company, Mr. Varun Jaipuria, Executive Vice Chairman and Whole-Time Director, and Mr. Raj Gandhi, Group CFO and Whole-Time Director of the company. We'll initiate the call with opening remarks from the management, following which we'll have the forum open for a question and answer session. Before we begin, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation shared with you earlier. I will now request Mr. Ravi Jaipuria to make his opening remarks.
Good afternoon, everyone, and thank you for joining us on our earnings conference call. I hope all of you had the opportunity to go through our results presentation that provides details of our operation and financial performance for the first quarter ended 31st March 2024. In spite of the delay in Holi festival by 17 days resulted in delayed seasonality cycle, we are pleased to report a reasonably strong overall operational and financial performance in the first quarter of the year. We achieved a consolidated sales revenue growth of 10.9% with a breakup of volume growth of 7.2% and net realization per case growth of 3.5% in quarter one, reflecting an improved product mix in India and higher contribution from international markets overall. EBITDA increased by 23.9% year-on-year and PAT increased by 24.9%. Further, our sustainability efforts, including the focus on reducing sugar content, removal of corrugated pads in packaging, and lightweighting of packaging materials, have started showing results in increase in gross margins. During last quarter, we also established our sustainability report in accordance with the GRI reporting standards. We are committed to transparency and accountability in our sustainability reporting practices. And we believe that using the GRI standards allows us to provide comprehensive and comparative information to our stakeholders. To fulfill our growth commitment in our core market in India, we commenced 3 greenfield facilities located in Supa, Gorakhpur, Uttar Pradesh, and Khurda, Odisha. This expansion is designed to meet the rising demand for beverages in India and support our long-term growth trajectory. Our greenfield plant in DRC is expected to start by the next quarter. A significant highlight of the quarter was successful completion of strategic acquisition of the beverage company Bevco in South Africa. This move has notably expanded our footprint and fortified our presence across several dynamic markets in the African region. Furthermore, Varun Beverages Morocco, a wholly owned subsidiary, has entered in an exclusive snacks appointment agreement to manufacture and market and package Cheetos into Morocco by May 2025. This agreement complements our existing distribution of PepsiCo snack portfolio, making another step forward in our strong symbolic partnership. In a nutshell, we have additionally fueled 3 growth engines which will gradually and consistently contribute to revenue and profitability growth in the company. First growth engine is South Africa's combined territory with Lesotho, Eswatini, Namibia, Botswana, Mozambique, and Madagascar. Second growth engine is entry into new territory of DRC, where PepsiCo is not present at all as of now. The commercial production here from our new state-of-the-art green plant is expected to start from the next quarter. The third growth engine is entry into snack foods production by May 2025 in Morocco. I would now invite Mr. Gandhi to provide the highlights of the operational and financial performance. Thank you.
Thank you, Mr. Chairman. Good afternoon and a warm welcome to everyone joining us today. Let me provide an overview of the financial performance for the quarter ended 31st March 2024. The revenue from operations adjusted for excise GST saw a healthy 10.9% year-on-year increase to the level of 43,173 million in Q1 of calendar year 2024. Consolidated sales revenue reported a growth of 7.2%, reaching 240.2 million cases in Q1 of 2024. This increases with increases of 4.4% and 21.9% in India and international markets respectively. During Q1 of the calendar year 2024, the consolidated net realization per case rose by 3.5% to the level of 179.7, supported by an improved product mix in India and a higher contribution from international markets, which command higher realization per case. CSD constituted 71%, juice 7%, and packaged drinking water 22% of the total sales volume in the Q1 of CY 2024. Our gross margins improved significantly, rising by 385 basis points to the level of 56.3% from the earlier level of 52.4%. This increase was largely driven by our focus on reducing sugar content and lightweighting packaging material, incidentally also meeting our sustainability initiative, along with the benefits from reduced PET prices, which contributed to this improvement. Approximately 46% of our consolidated sales volumes come from low sugar or no sugar products, reflecting our commitment to meeting the evolving preferences of all consumers. This strategic focus now only aligns with the consumer trends but also optimizes our cost structure by reducing sugar costs and enhancing overall efficiency. These efforts have had a tangible impact on our financial performance, with EBITDA increasing by 23.9% to the level of 9,887.6 million year-on-year, and the EBITDA margin improving by 240 basis points to the level of 22.9% in Q1 of 2024. The above improvement of 240 basis points is in spite of rise in fixed costs associated with acquisition of the new territories and commissioning of new greenfield plants for the season. As these new capacities begin to contribute to our performance, we expect these costs to be better absorbed, enhancing our financial efficiency moving forward. Depreciation increased by 8.9% in Q1 of calendar year 2024 on account of capitalization of assets and the establishment of new production facilities. That is, for reference purposes, Kota and Jabalpur, which were capitalized during the last year, and Supa, which is capitalized during this quarter. Finance costs increased by 49.7%, primarily due to higher debt for acquisition and capex, as well as increased borrowing costs. The capex for these three plants is already done, barring a bit for DRC, which is pending. And on the other side, the cost is gone up. Last year, same quarter, the average cost of borrowing was 7.7%, which this year is 8%. On the debt front, we expect to amortize majority of the incremental debt taken during the year for BevCo acquisition as well as for capex in the next couple of months. That grew by 24.9% to the level of 5,479.8 million in Q1 of calendar year 2024 from the level of 4,385 million to Q1 of 2023, driven by volume growth and enhanced profit margins. Coming to an update on our growth initiatives, we have successfully commissioned 3 new greenfield production facilities in India, significantly enhancing our production capacities. In Supa, Maharashtra, on 25th January 2024, with an investment of 10,000 million. In Gorakhpur, UP, on 13th April 2024, with an investment of 11,000 million. And in Khurda, Orissa, on 30th April 2024, with an outlay of 7,000 million. We also have set up backward integration facilities at all the 3 above-mentioned greenfield plants, taking the total number of integrated plants to 13. That is, the plants with the backward integration facilities. These investments are poised to support our long-term growth objectives as well as profitability. Additionally, the forthcoming capex of 4,000 million for our DRC unit will enhance our capacity expansion strategy in African region. Furthermore, we finalized the strategic acquisition of BevCo, expanding our footprint into new and dynamic markets. We also secured an agreement to produce and package Cheetos in Morocco. As we move into peak season, the growth outlook stays no way different from the past few years, and the performance given the strong heat waves prevailing across India during the summer quarter where we are. Our strategic investments in enhancing production capabilities and making new acquisitions have significantly strengthened our global presence. These initiatives have established a solid platform for sustained growth in the foreseeable future. On that note, I come to an end of the opening remarks and would like to now ask the moderator to open the forum for any questions or suggestions that you may have. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abneesh Roy from Nuvama Institutional Equities. Please go ahead.
Yeah, thanks and congrats on strong margins. My first question is on the outlook. So June quarter, clearly your base is quite favorable. It was soft. Plus, we also have the heat wave. And is there any benefit also from the election-related rallies, etc.? So wanted to get a sense on how you see June quarter. I understand guidance will be difficult, but do you think that much stronger double-digit growth should come back in the Indian business, volume growth?
Well, we can't tell you exactly what growth will come back because half the quarter is already over. So, as you see, the heats are strong and soft drink sells when it's stronger heat. And we have the advantage this quarter of Ramadan being moving towards March, which hurt us a little bit in the March quarter last year. So it looks very positive, and I think we should have a good quarter.
And one related question was on the overall market also. So Campa Cola in FY24 has done around 400 crore sales. If you could tell us any market, any kind of impact, or it's mostly the market has expanded. And second, to your own business, if you could tell us quick commerce, e-commerce and modern trade in March quarter, how was it this year versus same quarter last year?
Yeah. See, the e-business in our category is very small, so we to that extent do not track. But yes, the growth is there, and I read your report on Reliance also. They have done a good work. But what we are saying about our numbers, which definitely are looking very healthy, and the reasons you explained, heat wave, elections, and low base of the last year, and also the capacity which we have already increased by adding these 3 plants and to make use of this. And we are actually making all the time arrangements how to meet the requirement, and we don't go out of stock actually.
So thanks. That's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Percy Panthaki from IIFL Securities. Please go ahead.
Hi, sir. I was just looking at your subsidiary sales, that is the console minus the standalone. That has grown for this quarter roughly by about 30% YOY. So what is leading the growth in the international? And secondly, in the international, on an overall basis, what is the volume growth?
Volume growth internationally, as stated earlier, is 21%, and in fact India, is actually would not have any way different. And why it is lower is because Holi started late. The calendar actually doesn't coincide, the festival or the summer calendar.
Ramadan was earlier.
And the Ramadan, these do not coincide with the calendar or the quarter which we follow for our reporting purposes. But everything is intact.
And this 21% growth, any flavor on which geographies are higher than the average, lower than the average?
Morocco always leads, Zimbabwe leads, and they have already become too large, and good percentage increase in the larger territories makes the impact.
Understood, sir. Also, could you give us an idea what is the capex on a cash flow basis that you are estimating for calendar 24?
As 3,600 capex, which was already, we had informed everyone. 2,400 out of which was already done in the last financial year itself. Out of 1,200, broadly it's done. There's only small portion, maybe 200 crore in DRCs left, and maybe small amount in India. Most of it is already done.
Okay, so now, for this calendar, around 1,500 crore?
Our effort is to amortize the money which we have borrowed. So capex is done. Now we are going to the next phase.
Right. Understood. So most of your capex is done, and would I be right in assuming that, let's say, next calendar, that is calendar 25 also, our capex would not be more than like 1,000 to 1,500 crore? Would that be a reasonable assumption?
Let's wait till June, because the kind of growth we expect, if we get it, it has to be more.
Okay. Understood, sir. Yeah, that's all. Thanks, and all the best.
Thank you.
Thank you.
Ladies and gentlemen, in order to ensure that the management will be able to address questions from all the participants in the conference, kindly limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Jay Doshi from Kotak. Please go ahead.
Hi, good afternoon, and thanks for the opportunity. Now, if I were to look at, other than June quarter last year, for the remaining 3 quarters, your volume growth in India business of about 20%. Whereas last year, June quarter, it was barely about 2%. So when we look at this June, should we think about, that 17-18% volume, potential volume growth that you lost last June, and about 10-20% over and above that? So is the demand environment conducive, and is your supply side capacity expansions, was it commissioned on time for you to be able to capture what, the math indicates, which is like close to 30% volume growth in June quarter?
Jay, I appreciate the parameters which you have defined. I no way differ from you, but let's keep the fingers crossed. It's ongoing quarter. But
our capacity is enhanced, and the plants were in time, so we are okay capacity-wise.
That's very helpful. Second is, now that you've made some progress on the foods business, would it be possible to give us some color in terms of, at a right scale, what would be the profitability and, return ratios? How would it compare versus the beverages business, on the foods side?
I think it's a bit too early. We are only going to start the first plant next year. But food business is as good or better than the beverage business.
I'm assuming this is return on capital, right? Given that capex would be much lower than beverages.
Yeah.
Thank you so much. I'll get back in the queue.
Thank you.
Thank you. The next question is from the line of Anand Shah from Axis Capital. Please go ahead.
Yeah, I guess a couple of questions maybe from me. The first one on, you've done great work on the gross margin expansion through multiple initiatives. So I just wanted to understand the sustainability of this, and would you at all like to sort of revise your margin guidance?
The guidance stays the same, Anand, as we have given earlier. We have specified the reasons. One-off, we keep on getting these, and which always help us. But in the long run, the guidance we should take just the same, because we do not know the weather conditions, we do not know sometimes the competitive scenario, etc. So I think the margin guidance which we have given in the past, for the long run, we should stay with that only.
Okay, thank you. And just one last one on the balance sheet side. Can you share the debt numbers there for the current quarter, given that you expanded on the BevCo payment and all, so that we know as to what is the repayment and how it go down?
We have made a payment of 1,260 for BevCo, and out of 1,200 capex which was to be done in this quarter, out of that about 1,000 or 950 is already done, and minus the profit of last quarter and 45 days. Exact numbers for the quarter we will not be able to give. We will be reaching, and we also have given a guidance that in a couple of months these two additional debts will be amortized, and we will be doing all the endeavor to reach at the 31st December the debt position.
Got it. And you had indicated during the acquisition you may explore some structure sort of to work out in South Africa in terms of the payment and all. Is that something which is ongoing?
Structure was that on the capex, which we have gone solo, which we have already announced. 100% equity is with us, minus ESOPs, which to the staff we had to give. We have announced that 100% is with the company only. So that first structure is very clear, already announced. However, we made some state borrowing, remitting money from here versus borrowing something locally. Because the cost difference between India and borrowing in local currency in South Africa was not much, 150 basis point difference only, which gives us a big insurance on the the exchange fluctuation in managing our balance sheet. So some money was borrowed there. We have done only debt equity or structure or location only to this extent.
Got it. And one last one, if I may. We're starting to see Rockstar in your presentation in energy drinks. So should we expect the launch this year?
Anand, this is what we got, in South Africa, because they were doing a small portion of Rockstar there. So it was good when we are making a consolidated brand presentation to include that. So India, we will have to wait for some time.
Okay, perfect. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Devanshu Bansal from Emkay Global. Please go ahead.
Yes, sir. Thanks for the opportunity, and congratulations on good margin execution in the past quarter. Sir, you indicated that summer season has started off well. Wanted to check if you can call out the utilization levels of your plants for the month of April, as in how are we trending on that front?
You want me one word? About 100%.
Okay. That's really encouraging to hear, sir. From depreciation perspective, Mr. Gandhi, as some of the plants were commissioned during the quarter, what is the expected run rate for depreciation going into the coming quarters? If you can help us.
Basically, how we measure is as a percentage of revenue. If you see the percentage year after year on the full utilization basis is coming down, and we feel to maintain the same trend, and the depreciation as a part of revenue, I don't think will change this year also.
Got it, sir. And lastly, from my end, what is the expected contribution from South African market in terms of revenue, EBITDA for this year? Is it like broadly similar to the matrices shared during acquisition, or we are seeing some improvement there?
It's too early for improvement. I think we've just taken over and it's off-season now in South Africa already started. So I think give us a couple of quarters before we start really giving you numbers for South Africa. But it's a great acquisition. I think we'll do well, and just give us a little bit of time.
Thank you so much, sir. Thank you for taking my question, sir.
Thank you. The next question is from the line of Aditya Soman from CLSA. Please go ahead.
Hi, good afternoon. Two questions. Firstly, can you tell us a little bit more about the increased capacity and your plans for Gatorade and Cream Bell? And secondly, again, in terms of South Africa, any sort of color in terms of the numbers for the next year will be super useful. Thank you.
Okay, so three questions. One is on Gatorade, second is on Cream Bell, third is on Belco. So yes, Gatorade, the focus from PepsiCo has come, by way of price correction, the pack size correction, and allowing us to produce for more than one plant. So the efforts are on, but it's still at a very niche stage. And at this moment, a small change will not make a difference, but it is a product which is little futuristic. And also, one more thing, they have also launched with a formulation with the zero-cal Gatorade. So it's a very promising product, but we'll have to wait for this. Same is true for Cream Bell. Cream Bell, actually, the capacity announcement, which was delayed, and it did not happen on the very first day like other lines at these plants. So there, of course, is again a promising this thing.
But it's doing well, and we are seeing huge growth, and whatever capacity we are able to produce, we are able to sell, even with the enhanced capacity.
Thank you.
And Aditya, coming back on Belco thing, Belco, there are 5 plants which are, already operational working. And by September, October, when the season starts, we have to make certain improvements to enhance the capacity, one side. And in the meantime, the share of PepsiCo, which is a better contributor of top line and bottom line, to interchange a share from own brands to the Pepsi, enhance the profitability, and then, once we are ready, then assess where increasing capacity by adding lines or by adding plants, and take, action those things and go ahead from that.
That's very clear. Thank you.
Thank you.
Thank you. The next question is from the line of Onkar Gugadare from Shree Investments. Please go ahead.
Yeah. Am I audible, sir?
Yes.
Yes, sir.
Yeah. My question was regarding, I know it's been only few months you have taken over Vasco, but could you share some vision on that, where you want to take it, what kind of size it can become in terms of overall portfolio for Varun Beverages, and what changes you want to...
Yeah, sure. In this Echo, okay, South Africa is a huge market. Per cap is one of the highest, anything between 170, 80 or 200, and matured, where is
250 plus.
I'm corrected here, 250 plus per cap consumption in that country. And PepsiCo is a very, very meager. If we see in the industry, the share of Pepsi is as low as 1.8%. Even if we see it between Pepsi and Coke, that's the global brands, the share is 2.7% only. So huge upside, and we have in the past, our track had been good. Zimbabwe, where we had gone, PepsiCo's share zero last year, as we have mentioned in past calls, achieved 71%. Zambia, we did this thing. Morocco, we have repeated this performance. And hopefully, we will be doing it. You have to give us some time to, correct our act and put the act in order, and definitely make it few folds at least.
Okay, so like volume-wise, it is lesser than India, but the realization would be much higher, right?
Per cap is much higher, yes.
No, I think, we are still too early for South Africa answers, I think give us a little bit of time to understand the full market. Give us a quarter or 2 quarters. Let us then give you the right. But it's a huge market with a huge scope, and we are working on it.
Okay. In terms of Indian growth this season, you said that Holi Festival was delayed by 17 days, resulting in...
you are not audible clearly, please.
Sir, may I request you to kindly use your handset, please?
Yeah, I am using handset. Is it audible now?
Yes, sir. Please, sir.
It's better, yes.
Yeah. You were saying that it was delayed, Holi Festival was delayed by 17 days. So that's why there was some loss of sale or delay. So, like...
17 days the delay was for India Holi. See, what happened...
It was for the first quarter because Holi was late this year and Ramadan was earlier, so affected the season partly. So that benefit you will get in this quarter.
So there will be a spillover of sales, right? Because of in the current quarter.
Yeah, basically when we are saying the model stays the same and the calendar doesn't coincide, summer calendar versus the reporting quarter. So yes, there will be some shifting, overlapping from last quarter to this quarter because summer is shifted towards April.
Okay, just wanted one clarification that all the 3 plants which you just told, all of them were operating in the last quarter?
They are all operative in April, from April onwards.
Okay, and what was the utilization in the last quarter, Jan to March, for all 3 of them?
2 of them have started operating only in April.
Yeah. Okay, and the one remaining, which started in January, right?
The one which was started last quarter, January, February, and not the full season months, those are part of the off-season. But as we were heading towards the season, every plant is being utilized more or less around 100%.
Okay, all right. Thank you.
Thank you.
Thank you. The next question is from the line of Sumant Kumar from Motilal Oswal. Please go ahead.
So in this quarter, the gross margin expansion, the 2 factors you were talking about, lightweight packaging. So can you talk about how much percentage of total sales volume we have on lightweight packaging, and there is further room of growth, and also talking about reducing sugar content, and you talked about 46% of our consolidated sales is coming from low sugar content.
Can you speak a little slowly and just repeat? I couldn't hear you properly. There's something not very clear on the line.
Mr. Kumar, I would request you to use your handset, sir. Your voice is muffled.
Yeah. So the first question is when you talk about the low or lightweight packaging. So can you talk about how much percentage of total portfolio is lightweight packaging currently, and how much it is going to increase from current level? And the second question is for the low sugar content. We are talking about 46% of the total consolidated sales volume is from low sugar content. So can you talk about from here, can we increase this percentage?
It's difficult to give the number for futuristic, but for the past, if you are interested, we have worked in detail and compared it, from 2010 to 2023 in page number 15 of our quarterly result presentation put on website. And we have also given this for various preforms for 600 ml, 750 ml, 1 liter, 1.25 liter, and 2.25 liter, as well as reduction in the grammage for the closures. So these two things are already provided in much detail in page number 15. And the scope for future basically will depend upon the technology changes, etc., which will support the weight reduction. So as of now, the position is given.
Okay. And what about the sugar content, 46% portfolio?
I have in my opening remarks stated as of now 46% of our total portfolio is either zero sugar or low sugar. And actually, South Africa has helped us a lot because in that country we have already reached about 90% of the portfolio, 89% precisely, which is less sugar or low sugar. And the another country which is following the same is Morocco. And in India also we are doing a lot of efforts, and we have now in our launches Mirinda, 7-Up, other than PepsiCo Leaf, Pepsi Max, and low sugar and that Sting. So we are developing, more and more. Gatorade we mentioned, new launch which PepsiCo has given us formulation with zero sugar. So effort is there, and constant effort is there to, reduce the sugar content.
And this will help our gross margin going ahead.
Any profit this is sharing, then between Pepsi and us, and yes, to some extent it is helping us also in the gross margin.
Oh, thank you so much.
Yeah.
Thank you. Before we go ahead, we would request all the participants to use their handsets for optimum audio quality in the conference. Thank you. The next question is from the line of Karan Gupta from Varunium Capital. Please go ahead.
Good afternoon.
I'm sorry, but your audio is not clear. There is a static on the line. Mr. Gupta?
Yeah. Hi.
Yes, sir.
Hi.
Please proceed.
Now it's audible?
Yes, sir. It's much better. Thank you.
Yeah. So my question is regarding the capital structure, how we are looking forward for the next 3-4 years, right? How much debt we are including and how much equity we are putting up. So over the years, our debt is increasing. If you just see the last 2 to 3 years, the debt is increasing significantly, right? And I understand this thing that we are entering into the market where the opportunity is very huge. So the expansion part is, the must. But over the next 2 to 3 years, how we are looking forward to raise the debt, as we are also putting up, expanding our capacities. So how much the cash flow we are generating? Just the estimation that we will not add much debt in our capital structure.
Yes.
So is there any benchmark, any structure you have prepared for the next 2 to 3 years that, let's say, 30-40% will include from our internal accruals, and then the rest will be from that? So that's something kind of question I have.
Sure. See, in the past we had enough, debate on this, and any time for the last 2-3 years, you must have noticed, or 4 years, that our debt EBITDA is around 1.25, and debt equity half 0.6-0.7. And after 1 or 2 months, once the season is over, because this ratio will be at the same level. When I made a statement, in a couple of months we'll be amortizing debt which we have taken for these 3 plants in the current year of 1,200, plus we have taken for South Africa, will be at the same level of December. So ratio automatically takes care. How in return we get is perpetual EBITDA increase with the company and increase in the equity portion, retained earnings. However, through this debt in the interim, yes, we had to take, and that always has helped us in enhancing the return for our stakeholders with very healthy ROI. And we are conscious of the fact that it should not go beyond acceptable levels. And thanks for your suggestion, and we are within that.
Okay. And with this 3 greenfield expansion, what's the estimation of your cash flow generation from this? How we are looking forward around 5,000 crore of cash flow in terms of cash flow from operations. We are currently around hardly 2,500. So that the debt reduction will be there.
Well, it's a little difficult to calculate that way. Some are these are integrated plants with the backward integration. Some on the profitability side, and certain maybe with the 2 out of these are with the aseptic packaging line, which are capable of producing Tropicana as well as Crimpel, where in one there is no royalty payment. So all these are slightly difficult, but at that granular level on the phone it becomes difficult. But however, I can only say that debt levels are well within the norms and much better position than our stated position on our website.
Okay. So further for expansion, as you said, for a calendar year 25, you said June will be the time you will announce some capex for the CY25. So what's the plan for the, again, same question for the debt structure? If you're raising again, or that will be internal accrual?
All this debt amortization or all expansion in the from 19 to 24 in the last 5 years has been only from internal accruals, and all ratios of debt equity and debt EBITDA remained more or less at the same level, or sometimes they have shown improvement only. So will be from internal accruals only. But however, sometimes in the short run there may be borrowing. These may be supported through the borrowing because you have to incur the capex first, and then from the very first year itself, from April, May, June, you start realizing, and brings it to a comfortable level. So we study our balance sheet in 2 parts actually. One is when we incur the capex, the assets are put to use, that's in December, and June is when we are actually put to use and amortize part of debt. Therefore, was the comment that let's wait till June.
Okay, thanks for the explanation.
Thank you.
Thank you. The next question is from the line of Sanjaya Satpathy from Ampersand Capital. Please go ahead.
Yeah, hi sir. Thanks a lot for the opportunity. So my question is that this cream mill, you were giving some color that there was some delay in starting the factory. Can you just complete that part?
No, the delay was because of the Red Sea and all that. Instead of starting in January, it started in March. So, but it is before the season and it's running very well, and we are practically doubling our capacity.
Understood. And so this South Africa plant, which will be completely merged, and the full impact of it will come from the June quarter. Have you kind of given any idea about how much your depreciation, amortization cost and other cost will go up by?
South Africa, basically, if the franchise rights acquisition cost, balance the assets value is not that large, so depreciation there will not go up. But depreciation actually ideally has to be seen on the console level, wherein in the last 5 years balance sheet, if you will see, as a percentage to revenue, the percentage is coming down. Last year, it has come as low as 4.2% of our as a percentage to our top line, which earlier years it used to be 7-8% or 9%. So this improvement is very healthy and it's a good percentage. I mean, we have on this parameter really delivered in the past.
Understood. So, sir, will the amortization go up a lot, or I mean, I just wanted to understand the cost impact of South Africa, if at all it is there.
No, it will not have, because it will contribute maybe anything with 1,800 or 2,000 crore top line. So, I mean, it will have its own EBITDA. It's a positive profit-making operation with a huge top line. So, it will not increase as a percentage.
Okay. And last thing, if I can ask, that you mentioned that you have no plan to immediately use brands like Rockstar that is there in South Africa, in India. Just trying to understand what all synergy benefit that you are really looking at. I believe that you are saying that it will give us 2 quarters, but just understanding the thought process.
The Rockstar brand belongs to PepsiCo, so we have to align with them to with their strategy to launch the same in India. Basically, this is a brand energy drink category to address the premium category, which is very niche, and they have to be convinced that much market exists in India.
Understood. Thanks a lot, sir, and thanks a lot for all the details.
Thank you.
Thank you. The next question is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
Yeah, hi. Hi, Mr. Gandhi. And
good afternoon.
Yeah, very, very good afternoon. Just wanted to ask one question. 2025, barring the calendar year of 25, barring any acquisition, really speaking, that year should mark the beginning of a very favorable operating and financial leverage for us. Is that right?
You are saying the acquisition for the next year, 25, you are saying?
No. I'm saying, assuming no significant acquisition occurs in 2025, and we will be digesting the current acquisition of Bevco that we have made. Assuming no further acquisition in 2025, then 2025 onward should offer a period of once again very favorable operating and financial leverage to us, as our acquisitions will get digested and will scale them.
Very rightly put it up by you. In fact, very true. And this resonates with my earlier answer that in a couple of months, the capex made by the company in this calendar year plus Bevco, this thing will be amortized already. And after that, any addition in the debt is going to be for the capex of 25 only. Very correct. Or maybe after a couple of months, a residual year, maybe 4-5 months, which will be left of the current year, part of that will be net out of the cash retention from those 4-5 months operations. And if the capex we advance, then maybe slightly it goes up. Otherwise, without any new M&A for 25, the debt should not substantially change from 23 end by the 24 end. However, my EBITDA coming from these 3 plants and coming from 5 plants of South Africa should start contributing a lot, and DRC should start contributing a lot. Yes.
So in a way, a kind of flow-through model, very favorable virtuous cycle that we witnessed earlier, where top line to operating profit to the after the financial leverage into the cash profit due to depreciation, a kind of a favorable virtuous cycle, what we witnessed for preceding period of 2-3 years. Something like that hopefully should begin in next year onwards.
In fact, this is what we are demonstrating for the last several years, and this is what we always plan. But in the short run, little bit here and there is always possible. See, what happens is if there is a demand growth in the market, so we must prepare and make every endeavor that we don't lose our share by advancing the capex. At the same way, if internationally some opportunity comes up, we should not delay it, the M&A, and temporarily support the cash flow through the borrowing. But of course, we have to be very cognizant of the fact, one, that we do not spoil our stated ratios. Secondly, we are confident in a period of 12 to 18 months, we are going to come back to the original levels.
Without doubt. I think what has been achieved so far has been really commendable on each acquisition, in each move. But always the heart is greedy, ye dil mange more. So it was only from that point of view. And
Mr. Jaipuria is smiling. He's amused with his statement and adopting our phrase line. Thank you very much.
Ji, Jaipuria ji, namaskar. Hope you are fine.
Namaskar ji. Namaskar ji. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ruchita Katke from iWealth. Please go ahead.
Good afternoon. So my question was mainly in the line of DRC. So just wanted to understand what kind of volumes can we potentially do in that region, and how big is that market?
That market is quite large, but unfortunately it's not a very, the numbers are not very clear in that market, but it's more than 100 million population and warm climate. We have put 2 large lines and our capacity is about 35 to 40 million cases is what we can produce. So we hope to do well, and as soon as our plant starts by the end of this quarter, we will really see how well we do and how fast we can grow that market.
Okay, sir. And so similarly with South Africa, sorry if I've missed it, but how big is that market and how much volume can we do there potentially?
South Africa is close to a billion case market. It's a huge market, and our Pepsi share is only 2% practically. So there is huge room there, although we have our own brands where we are doing well, and another 12% market share is that. But as a market, it's a very big market, and we have huge scope to grow, and we have 5 plants.
Okay. And sir, can you give me the capacity of these plants altogether?
Well, there is enough capacity, but they were not maintained very well, so we are correcting them, and by September, before the season starts, we will have enough capacity to grow the market, and whatever corrections are needed, we will do it before the season starts.
Okay. Understood. Thank you so much.
Thank you. Ladies and gentlemen, we will take this as the last question for today, which is from the line of Saket Mehrotra from Tusk Investments. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yes, sir.
Sir, could you give us